Is the market set to rally this week? Here's what you need to know before the bell. In this past weekend's newsletter on the website at realinvestmentadvice.com, we discussed last week's sell-off, which we've actually been talking about since the beginning of February when we reduced our equity exposure prior to the FOMC meeting, concerned about market prices and the sell signal that was being triggered at that time. Of course, since then, the market struggled a bit initially and then finally gave way last week as interest rates really began to tick up and realization that the Fed is going to be hiking further and faster, most likely, than markets currently expected. In fact, the terminal rate for the Fed funds, which is where the Federal Reserve is expected to hike rates to now, is up to 5.4%. And the odds of a 50 basis point hike were 0 last month, now at 40%. So again, more concern here about tighter monetary policy weighing on stocks. And as we discussed in our newsletter over the last couple of weeks in particular, that we were targeting this initial support at the 50 and 200-day moving average. That was key critical support for markets to hold. We're now there at that support level, held that on Friday. Markets are oversold here. So again, the opportunity for at least a short-term rally is very present. Use any rally that you get back towards 4,000 on the index, which is about where the 20-day moving average is right now, as an opportunity to reduce risk, rebalance your portfolio as needed, because again, we're likely not through this corrective cycle yet. We still have both of our MACD signals and our money flow indicator intact in the sell modes right now, which suggests that prices will continue to either consolidate or decline. Upside will be limited as long as these sell signals remain intact, and that's normally the way this market has been working for last year or so in particular, but over the long term, these signals tend to give you pretty good direction as to when to increase and reduce exposure. Those signals still in place here, suggesting that any rally will be limited. Use that as an opportunity. But again, with markets as oversold as they are now, a rally here will not be surprising at all. But be careful with this, because the last time that we were this oversold was back in December of this past year. The markets remained oversold while the market really went through this bottoming process. So it does not mean that once you get this sell signal on both sides, the market comes down and bottoms. It can just literally travel sideways. That is possible. But again, the big thing here is we've got to watch these support levels. A break below that 200-day moving average is going to bring in a retest of the December lows first and then potentially the October lows as well. So again, there is risk to the downside here. Watch these support levels. They are very critical, and use any rally for right now to reduce that risk in your portfolio. I'm your host, Lance Roberts, and that's what you need to know before the bell.